Hi everyone, and welcome to episode 5 of the Introduction to Forex Trading series. In this episode, I'm going to be explaining everything you need to know about investor funding as it relates to Forex trading. Before investor funding started becoming so available, it could take many years to build up the capital required to make a life-changing income with Forex trading. But now with investor funding, that timing has become dramatically cut down. This is a very powerful topic to understand and approach carefully. So in this episode, we'll be exploring what investor funding is, when in your trading journey you should get funded, how to get funded, and who to get funded by. With that said, let's get started with this lesson. Inside the Forex trading space, there are legitimate companies which make money by providing profitable Forex traders with funded accounts to trade. In the trading space, these companies are known as prop firms. These companies typically offer anywhere between $10,000 to $400,000 of funding per individual, although some go much higher. To acquire this funding, you simply need to select the desired amount of funding, pay a small fee, and pass a trading verification challenge which tests your ability to generate profitable returns in the market. If you have the right trading skill set, risk management, and performance psychology, these challenges are very possible to pass. Most of them require you to generate 10% within 30 days. This may initially sound like a lot, but in Forex, this is very doable. These funding firms are a vital component of the trading community because they provide a clear path of progression for traders to start generating large financial returns. Let's move forward by discussing when in your trading journey you should look to start getting funded. Funding is not something which you want to rush towards, so you should understand when the right time is for you to give it a go. The right time to apply for funding is when you're generating consistently profitable results in some form of live trading. Even if it's only a $1,000 account, we do believe that you should have some experience in live markets before applying for a funding verification challenge. The reason why is because live trading presents extra psychological challenges that won't be encountered while trading on simulated accounts. Having the right performance psychology is a major key to passing a funding verification challenge. In terms of trading performance, it's difficult to say exactly when you're going to be ready for funding, because this will be so different for everyone. But it's pretty safe to say that if you're generating above 10% a month, while still using intelligent risk management, which we'll talk all about in episode 10, you're definitely ready to go for funding. If you're close but not quite there yet, you can and probably should just jump in and give it a go, simply to get used to the process and to gain experience on the larger account sizes that you'll be trading with on a funding provider. However, if your consistent monthly results are below half of what's required to pass the funding verification challenge, it's probably best for your trading to just focus on bringing those returns up. As we said previously, funding shouldn't be rushed towards, but when you're ready, don't hold back. Jump in and give it a go. When you get to the stage when you're ready to get your first funded account, you're going to want to do it the right way. If you're on a lower budget, what we would suggest doing is starting on one of the smaller account sizes because these have a smaller initial fee. For example, on one of our recommended funding providers, the fee for starting a $10,000 funding verification challenge is €155. For many people, this is an affordable option. So the way that we would suggest doing this is to first get a $10,000 funded account and then use the profits from that $10,000 funded account to purchase challenges for a $50,000, $100,000, or even $200,000 account. These are the accounts where the real money is made. By following this method, you'll reduce the potential for unnecessary spending on challenges which are too large for your budget. Overall, we firmly believe that this method will actually increase your overall probability of achieving success, because it's going to reduce that feeling of pressure that you might get if you've spent big on a challenge. This will have a soothing effect for your psychology and allow you to focus on what's most important, which is generating profitable returns in the market. Now that you know when to get funded and how to do it, you'll of course need to know which firm is going to be best for you to select. For our trading strategy, our hands down recommendation is FTMO. FTMO are simply the most reputable and stable funding provider in the industry so far. They have enough leverage for our lower time frame trading strategy, a generous profit split, good payout options including crypto, and high quality trading systems. If our view on this changes at a later point in time, we will come back and update this video, but as I said, FTMO is just leagues ahead of the competition at this stage. We personally use them as our primary funding provider and haven't had an issue with them so far. If you're interested in signing up with FTMO, you'll find a link below this video which you can use. So that's all there is to it, because that's how simple it is. We hope that this video changes your life, and make sure to let us know how you go in getting your funded accounts. Thanks for tuning into this episode, and I'll see you in the next one when I'm going to be discussing how to actually enter and exit the market on an individual trade level.